what we've seen so far this year is really the dollar's moved sideways. There was big dollar depreciation last year. And Barclays, we've got a slightly out of consensus call. We're looking at the recovery, the rollout of the COVID vaccines in the US, and also the rise in US yields. And, they moved up to, over 140 in the 10-year this week. And that's really supporting some of the currencies against the dollar, particularly dollar yen. Conversely, other currencies which are, moving ahead well with the vaccine rollout, sterling certainly, also Aussie and Kiwi, they're the outperformers against the dollar this year. Now, the dollar's, had quite a depreciation through 2020, but, in our view, the rising yields and also the better growth outlooks for the US. COVID's been very difficult for many people over the past 12 months, but it seems more likely the end's in sight now. And a combination of that and the higher yields supporting US growth, we think, the dollar's done enough for now. And we think it'll reassert itself, particularly against the euro. The euro had a lot of good news last year around its monetary policy, but we think, with the elections coming through in Europe through this year, and there's been a lot of good news baked into the euro. Also the COVID response is lagging a little bit in the Eurozone. So we see, capacity for the euro to depreciate through 120 as the dollar reasserts itself.
James, we'll come back to the Aussie and Kiwi dollar in just a moment. I want to ask you quickly to expand more on the picture for the yen, because some very complex dynamics regarding the control of the virus, and they're quite, frankly, later than other major economies' vaccine rollout in Japan.
Yes, absolutely. So, after kind of a better response initially, it appears that the opening up in Japan is going to be slower maybe than some of the other economies. And the dollar-yen dynamic's been very interesting. So, historically, we've seen the yen tend to appreciate and the dollar depreciate in some of these risk-off events and as equities sold off. But really this year, dollar-yen's been bulletproof and it's one of the top performers in the G10. We put that down to, continued yield curve control by the BOJ. There are no rising yields in any real sense for the Japanese yen yet. And, the dollar yields are, 30, 40 basis points higher this year. And that's really supporting the carry trade against the yen. And we see that set to continue. Main risk to that outlook, as you say, as the COVID responses balance out globally, there could be some retracement. But, if the BOJ was to loosen its yield curve control in any way, I think that might drive some yen appreciation. But for, now we like the long dollar yen trade. We're seeing the clients come through on a consistent basis to put it on. And we think that's got more upside.